As we know, prices of crypto has come down quite substantially. We are in June 2022, which is coming up to the end of the financial year in Australia, which is the 30th of June. So a lot of us would have made some unrealized losses on our crypto, and we can actually bring forward that losses into this financial year if we also make capital gain in, say, for example, property or shares, to offset some of the taxes we have to pay, for those gain. So in this video, I'm going to look at an example where someone has bought the hex 100,000 USD worth of hex back in October 2021 when it was around about the 40 cents. And now it's dropped down to about the 4 cent mark, so it's come down 90%. So this is basically what it looks like. If you have a look here, here's the demo account. Let's have a look. Okay, this is 100,000 USDC was deposited into this ledger ETH1, which is a cold storage device. And then 100,000 was then swapped over on Uniswap to 250,000 hex, making it a cost price of 40 cents per hex. So if you have a look here, you can see that the cost here is 40 cents per USD per hex. Now, the way we do it is because it's now gone down 90%, we can then buy the same amount using 1/10 of the USD value. So we deposit $10,000 and we then do a new trade using 10,000 USDC and 250,000 hex, and we did it on our ledger. Ledger or Trezor is all the same. Don't store your crypto on an exchange. Always store it on your hardware device. So you sell that to buy that. Okay, and we're doing it basically now. So what that does now is we now have 500,000 hex with average cost obviously less than 40 cents. The average cost now is, okay, here we are, 22 cents USD. So it's brought down our cost. Now what happened is, before the end of this financial year, which we've got another 2 weeks to go, we could do another trade. We could then sell the 250 that we just bought, okay, of hex, for $10,000, say, for example. Go back to get our money back, sell it at 4 cents. Ledger ETH1, Ledger ETH1. Okay, we sell that back to our 10,000. So now we've only got the 250,000 hex. So let's have a look at the realized, unrealized gain and losses. We could see that now there's a couple of options here. Now you could go less last in first out options, which will give you 90,000. Last in first out means the last one that was purchased is the first one that gets sold. So that's why you can see that there is that there's that 90,000. Actually, no. Let me go highest in first out. Okay, there we are. So if you go highest in first out, then you make that loss. Yes, because if you go last in first out, you've basically just sold what you purchased recently. So hex, you didn't move. So highest in first out is the way in this situation to create that capital loss of 90,000 this year. Now, obviously, if you choose highest in first out, you need to do that going forward every year. And then if we go and change this to Australian dollar, AUD, save it, recalculate, then it will convert it to Australian dollar, obviously. And you see that you have now made $116,413 realized loss in capital loss, which means if you have sold a house at a profit, an investment house at a profit, that loss can offset that profit, or perhaps you sold some shares and make some profit. So in a way, you're sort of pulling forward that that capital gain or capital loss, forward. Okay, let's go back to US dollar again. Okay, now, so the next time when you do sell it, you're obviously going to have a bigger capital gain as well. So let's go back to look at the realized unrealized gain, and you see that now the cost basis of your coin is now 4 cents. So you've actually reduced your 40 cents per hex down to 4 cents while realizing this capital loss. Now, one of the questions you might ask, can I offset this loss against my, my income from my employer? That, of course, is not, because that is not a capital loss from what I understand. But unless your income comes from trading, so if you derive your income as trading, and these losses will become a business expense, and that's a different matter. That's my understanding. Of course, these are not accounting advice. I'm not an accountant. This is just something that I observe, playing around with coin tracking. And to do the tax report, you simply just go here. You choose highest in first out, and you choose from 1st of July to the 30th of June this year, and then you just generate a report. It's been generated. You go over here, you load it. You can see that there's a loss there. Actually, before you do that, you probably want to change it to Australian dollar. So let's go and change it to Australian dollar, AUD. And this is a report that you give to your accountant. Okay, let's go here, tax report. Yep, so it's useful if you're making some gain in your other investment this year. Here we go. I'm still using a free version here in this situation. Here we go. 116,000 of losses, and you can download that report, export it as a PDF. You can put your personal data here. If you want to put it under your personal name or trust, you could do it that way. And that's the report. As you can see, there's $116,413.64 Australian dollar in capital losses. So I hope this video is useful. If you have any comment, feel free to leave in the comment section. Thank you.